Gold is now consolidating just under the threshold time high at $3,578 after a steep August bull run. The bull case rests on three important things. The first one is the rising odds of a September rate cut and the real yield and softer dollar dynamics. Second one is the renewed ETF inflows. And the third one is the continued central bank buying. While if you look at the geopolitics and politics, it only adds a risk premium to the yellow metal. If we look at the real-term direction, it hinges on the next economic data, which is going to be this week. JOLTS, which is already out and softer than expected. Next one is ADP. Then we have the ISM PMI services, which is the non-manufacturing purchasing manager index by the Institute of Supply Chain Management. And of course on Friday we have NFP, which is everyone's favorite. Now looking at the gold 1 hour chart on TradingView, you can see that we had the previous or the newest all-time high at 3,000, let's call it 3,580, round it up a little bit. Since that we had a bit of a pullback, and no surprise because on the bond market, the long end of the yield curve, the 30-year government bond in the US just popped close to 5%, and it's been moving around that level since May 2025. If you look at the sterling, where we had higher inflation in the recent weeks or recent days, you can see that the short end of the yield curve in the UK, called gilts, have popped to almost 4%. And this shortly reversed after we had a poor US economic data, and this article refers to the JOLTS data. JOLTS means job openings in the United States of America, and the data was, yes, softer than expected, but it wasn't ridiculously low. And what it signaled to the bond market after the market opened on a bank holiday, so there was a bank holiday Monday, the markets opened on a Tuesday, and bond markets started to rally, i.e. investors were pushing money into fixed income assets because their expectation in the near-term future wasn't as rosy as other investors. But this data actually confirmed or reassured market participants that yes, there is still hope for another September rate cut. And many people arguing whether there's going to be a 25 or 50 basis point rate cut. If we look at the market logically, if you're struggling to understand hard economic data and fundamentals, I have a good news for you. You can sign up to the AlphaFX Academy, where I deliver daily macroeconomic analysis for all the members. You get everything written down before London opens. So I do the work Central European time around 6 a.m. in the morning, and I type out everything, all the scenarios, everything you need to know. You don't need to read news, you don't need to read anything. The only thing you need to follow is my channel in Discord, because I lay out everything for you for the day ahead and for the week ahead. And also, if I see any opportunities, you can see on the screen, this is the members Discord. If I enter into any trades, I share my trades. This is not financial advice, but I want to be as transparent as possible. So I share every single trade live with the members, and also I follow up with the trades, whether it's a loss or a win. So if you want to join the AlphaFX community, go to alphafx.eu and choose one of the subscriptions. You get monthly, quarterly, and a lifetime. And if you look at the data which is coming up, the only reason I see a 50 basis point rate cut this week is if NFP going to be extremely disappointing. What are the odds for that? Well, I don't know, but we're going to live trade it for sure. So if we look at the markets, especially gold market today, the question is now, I don't think it's going to be a 50 basis point rate cut. I'm more leaning towards a 25 basis point rate cut. But if the data is very disappointing this Friday, then we have the chance that price of gold going to reach well above $3,600. Yes, you heard it right. So now that we discussed the macroeconomics and the fundamentals, which is still a big question mark, but I explained at the beginning that what are the three key drivers. If you don't remember, go back to the beginning of the video, because there are three big things, three key drivers which are driving not just gold market, but all the markets globally. So now that we discussed the macroeconomics, let's go down to the technicals. You can see that gold had a very steep rally in August, at the end of August, and currently now it's consolidating or normalizing, bit of a pullback, but it's normal before high impact data. Today we are going to have ADP and ISM non-manufacturing. Now ISM non-manufacturing is important because it is the service sector. It's very similar to NFP. ADP also important because it's closer to NFP. JOLTS is a completely different breed of data, but ADP is the closest to NFP. Bear in mind there could be a massive discrepancy between ADP and NFP, and usually there is a mismatch between the two data. However, investors and traders do look at ADP and it will move the market. So now let's look at the scenarios how I'm going to trade ADP and ISM PMI. So the first thing we need to look at is what is the forecast for ADP. You can see that ADP non-farm employment on investing.com at 9:26 Central European Time. The forecast is 73,000 versus 104,000 previously. And bear in mind, you have to watch the revisions as well. Have they revised the data from the previous month? It's very, very important. But let's focus on now the forecast. The forecast is lower than the previous one, which is going to be bullish for gold. The reason why is because if there are less jobs being taken on by unemployed people or people who are in between jobs, that further strengthens the case for the Fed to cut interest rate. And an interest rate cut is going to be positive for gold. So I'm going to move these brackets right here, or you can see on the chart that already marked for you that in case if you have a softer NFP, anything below 73,000 or maybe negative, because we have had negative ADP last month, that's going to be a case for the Fed to cut interest rate, and that is going to be bullish for gold. Is gold gonna go drop below back to this trend line? There's very much a possibility with today's ADP. Overall, my bias is bullish on gold. So I'm going to be buying every single dip if the data confirms my bias. But what happens if we have a higher NFP? Now, if we have a higher NFP, that's going to be bad news for the Fed because they have to leave interest rate unchanged for longer than expected. And if you look at the global yields, you can see that interest rates are high as long as 4 years now. And not many countries started to cut interest rates. Yes, there were a few interest rate cuts in Australia and the UK and in the Eurozone, but not significantly. And if you look at the global yields, you can see that the yields are pretty much elevated in every single developed country. And the question is, how should you trade ADP today? Because we talked about NFP. I wanted to talk about ADP, but in the end, I ended up talking about NFP. So ADP is exactly the same strategy or speculation. If you have a softer ADP number, you can expect gold to revisit the nearest all-time high, which is at 3,580. But in case if we have a higher ADP number, a very strong ADP number, that's going to be a forecast for NFP tomorrow. And in that case, gold will revisit the trend line on the main chart. I hope you enjoyed the video and hope to see you soon in the Alpha FX family. Thank you so much. This is the Alpha FX.